Live from Bloomberg's world headquarters in New York, I'm Scarlett Fu.
And I'm Tim Stenevec. Welcome to Bloomberg Crypto. It's a look at the people, transactions, and technology shaping the world of decentralized finance.
Bitcoin wipes out its gains for the year, falling around 9% over the past week and at one point dipping below $90,000.
Okay, that's certainly on our radar this hour. Also this hour, President Trump meeting with the Saudi Crown Prince at the White House. We're going to discuss the crypto connections between the Middle East and Washington, D.C.
And later this hour, we speak to the CEO of OpenSea as the market cap for NFTs, remember those, drops dramatically since its high back in 2022.
That's all ahead over the next half hour right here on Bloomberg Crypto. First up, though, taking a check at Bitcoin and that sell-off. It has not been pretty over the last 6 weeks or so. Look at that. Down about 25% from those all-time highs. That was back in early October, down about 0.3% on the year. It did enter 2025 just shy of $95,000, going all the way back here. Now traders are making increasingly bearish wagers on Bitcoin. Demand for downside protection at the $85,000 and $80,000 levels, that's surged according to Coinbase-owned Deribit. That risk-off sentiment, that's spilling into crypto equities like bullish. Check this out. That's down about lost about half of its value since the post-IPO high. That was back in August. It's now down about to its IPO price of around $37. The company does report its most recent results tomorrow, so Scarlett, we'll keep an eye out for those.
Yeah, maybe it'll be a catalyst for a recovery in the share price, but it does go beyond Bitcoin. Some of the smaller and therefore riskier tokens are really bearing the brunt of this sell-off. Take a look at the Market Vector Digital Assets 100 Small Cap Index. That's your white line here. You could see the underperformance to the larger crypto assets. It began this week with a drop to the lowest level since November of 2020. That's right there. And this is really a reflection of that erosion in risk sentiment that you were talking about, Tim.
I want to bring in Bloomberg's Lauren Terra-LaCapra. She joins us right here to talk a little bit more about this sell-off. 25% to 30% from all-time highs, just kind of depending on where we are in the trade, recovering a little bit just in the last few hours. What is the catalyst over the last few weeks?
So I think that's one thing that people are grappling with. This is a real sentiment shift, and you hear comparisons from traders in the market about 2017, 2018, the FTX scandal. It doesn't feel like your regular tiny correction that'll bounce back. Of course, it's hard to tell what's going to happen, but that's sort of like what we're picking up in the market.
And in terms of ETF flows, those were really climbing since the ETFs launched, the spot Bitcoin ETFs, and it kind of continued through the summer, but we've really seen a sea change over the past month.
Sure, and even options on the ETFs, those bearish bets Tim was talking about, those are taking place a lot more, the past week or so. So I do think people are geared up for more pain, basically, and we'll just have to see what happens. But it's not a positive sentiment in the market.
All right. Bloomberg's Lauren Terra-LaCapra giving us a taste of the sentiment and the erosion in sentiment here, especially when it comes to the crypto space. There is a new product called the Perpetual swap that allows traders to take long or short positions on the digital assets price without actually owning it. And these trade 24/7 with no brokers and no closing bell, so you can do it to your heart's content. Bloomberg's Muyao Shen wrote on this, and she joins us now. So, Muyao, just give us the overall overview of what the pros and cons of a perpetual swap are.
Yeah, of course. So perpetual swaps are sort of futures contract, but they never expire. They sort of like, I think the concept itself is not very new, but it became hugely successful in crypto, I think, a couple years ago with BitMEX, which is an exchange that came out a couple years ago. It's very successful in crypto because it offers this leverage to special retail investors, so you can put bet on cryptocurrencies prices without getting into very complicated products like options. And in terms of cons, and we definitely saw that in the market crash in October with what happened with Binance and other exchanges. I think there's just too much leverage in the space. I think it escalated what happened in the market crash, and we saw some of the token prices even went down to zero for a brief moment during the October market crash.
The timing of this is just a little notable to me, at least, because we're in a risk-off sort of mood. I mean, what is the effect this has on trading, or could have?
I think what is very interesting here is that a narrative I keep on hearing from people after the October market crash is that why we're trading all these tokens that had no utility whatsoever, right? And then all of a sudden, I'm hearing all these new products are coming out on blockchains like Hyperliquid and others that allows you to trade equity instead of crypto. So it seems like part of the retail investors in crypto was tired of what's going on in the crypto market. They were like, we want to trade equities, we want to trade NVIDIA, we want to trade Tesla, all these firms, right? And so, and then they came in at the perfect timing to offer this leveraged product for retail investors.
Bloomberg's Muyao Shen. Check out her reporting and the entire team's reporting on the Bloomberg terminal. Let's bring in Jaime Leverton, CEO of ReserveOne and former CEO of Hut 8. Jaime, good to have you back on the program. I want to just start. We're going to talk about ReserveOne and the plan to enter the public markets through the Nasdaq in a SPAC in just a minute. But I just want you to weigh in on what we've seen with the price action since the beginning of October. You've been in the space for quite a while. You've seen your share of so-called crypto winters. Is that where we are right now?
Yeah, look, this is not where I think any of us expected to be. I've actually been on record over the past few weeks saying I didn't think we would see the return of the typical 4-year cycle, and I've never said that on record before, and yet somehow here we are. And I'm struggling to understand if we've kind of turned it into a bit of a self-fulfilling prophecy in the industry. We expect the 4-year cycle to repeat, and so part of kind of those of us that have been around a long time are taking selling action as a result of it. I'm still very bullish on the indicators that we're seeing coming out of the market. I don't see anything structural that should suggest we tip into a typical bear cycle. So really confusing, I would say, from where we were sitting a few weeks ago.
But to Tim's point, if we are in another crypto winter, it's not like we haven't been there before, because we've seen crypto and Bitcoin specifically recover dramatically. Let's take a look at this chart, which really highlights that. This is, it's very confusing, but the gist of it is that money supply surged as people were stuck in home during the pandemic with their stimulus checks. And so a lot of money had to find homes. Where did they go? They went to unprofitable tech stocks. That's a white line. Meme stocks, the yellow line. Bitcoin, the blue line. Now that bubble deflated in 2022, but Bitcoin, you can see the blue line there, recovered and then consistently made new highs. Bitcoin was down 55% in 2021, recovered. It was down 77% in late 2021 to late 2022, and it recovered. So given the price action that we've seen just in the last 2 years alone, Jaime, I'm wondering if there is a dramatic pullback that's sustainable. I mean, how deep could that pullback get, do you think, before it eventually comes back? Because that is the track record that we've seen in the past.
Yeah, I mean, it's interesting. We dipped under 90 overnight, and we've seen a lot of people step in and buying. You had the chart up. We're almost back to 94 this morning. Lots of protection, as was noted earlier, being put in at the 85K level. But again, we continue to see really positive news coming out. The news from Harvard earlier this week, we've got digital asset treasury companies that haven't yet closed, therefore they haven't funded and they haven't started deploying into digital assets. Stimulus checks potentially on the horizon, which could mimic some of the activity that we saw during COVID, which you just alluded to. So again, from where I'm sitting, I'm still very optimistic about what we're going to see opening in 2026.
I wonder also if the government shutdown plays a role in the declines that we've seen in crypto. I mean, we certainly see it in risky assets overall, but the shutdown kind of put a stop to whatever momentum crypto did have.
Yeah, absolutely. And anyone that has been in pipeline with the SEC, obviously that's created delays for deals coming to market in one of the most active capital markets times of the year, being that October-November season. Yeah. So certainly momentum plays into a lot of things here. I think obviously we're in a risk-off period. Lots of data we need to see from the government with them back to work, which could materially change sentiment in a pretty short order.
Jaime, I want to talk a little bit about mining, because you used to be CEO of Hut 8. You created one of North America's largest digital asset platforms at Hut 8. Hut 8 is now related to American Bitcoin, the Eric Trump company that is not just a miner, but a Bitcoin accumulator. I spoke to Eric Trump last week about mining, because something that's interesting that's been happening recently is that some of these mining companies are pivoting, and what they're doing is they're providing infrastructure to generate computing power for AI applications. Eric Trump told us last week that he's not going to do that at American Bitcoin. They're going to keep mining Bitcoin. Are these companies that are going all in on AI and moving away from mining Bitcoin, are they going to regret that?
Look, it's hard to predict the future. I think Eric's sitting in a particularly luxurious position being part of the Hut 8 family. Hut 8 obviously had started that transition back in 2022 when they made the acquisition under my leadership of a data center company, and continuing to kind of double down on their efforts, as we've seen, to move into the high performance computing space. So I think within that portfolio, they really have kind of the best of both worlds. And broadly, as a theme, we just have to think about what the best use or ROI is on the source of energy or on the electron. And I think companies that do that well and can really pivot between the benefits of Bitcoin mining and what that means from an interruptible power perspective versus HPC workloads, which are dedicated drains on the power system. I think we're going to see really innovative things and solutions coming from companies that can bridge or pivot between these worlds in this insatiable race for power.
So, Jaime, before we let you go, just give us kind of an overview of where things are with ReserveOne. Now that the government is open again and companies can move forward with capital raising, what's the plan for ReserveOne? Are you looking to list in 2026?
So yes, we're in process. We announced a number of weeks ago that we had confidentially filed our S4. So looking to get the deal closed. At this point, it will likely be in Q1 of 2026. As we've discussed publicly, we raised our PIPE back in July. Funding doesn't occur until the transaction closes, so it'll be at that time that we deploy into digital assets. It'll be interesting where we are in the cycle, at what point we can deploy, and where that purchasing power will net out. But obviously, very excited to get the deal closed here and get the team continuing to work and build.
All right, Jaime, thank you so much. Jaime Leverton is CEO of ReserveOne, formerly with Hut 8. Coming up on Bloomberg Crypto, President Trump right now meeting with the Saudi Crown Prince at the White House. So next up, we discuss how the Trump family's crypto ties with the Middle East have really been front and center this year. And a reminder that if you want to access all of the latest data and news on crypto, just check out CRYP Go on the terminal. This is Bloomberg.
Crypto is an investment area with its peculiarities and at times its own peculiar risks. On that one, it's just we go with our clients. And actually our regulators are quite happy that we get involved, because that way they get a clear view of what is happening in this exciting, potentially exciting new area of the world. The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
That was the CFO of Standard Chartered Bank speaking with Bloomberg's Anna Edwards on a new episode of Chief Future Officer, and you can catch that episode once it premieres this Wednesday at 9:30 p.m. Wall Street time. This is Bloomberg Crypto with Tim Stanovic and Scarlett Fu. We want to turn back now to the current White House meeting between President Trump and the Saudi Crown Prince Mohammed bin Salman. The Trump family fortune has grown this year thanks to crypto ventures worth more than $1 billion, and some of those deals include Middle East partnerships. Just this week, the Trump organization announced plans to build and tokenize a luxury resort in the Maldives with its Saudi Arabian partner. This as the Saudi Crown Prince makes his way to the White House. Bloomberg's Massa joins us now on set to discuss the Trump family's crypto ties to the Middle East. So, Annie, if you could just put everything in perspective for us, how far back does this go? What does it entail?
Sure. So most people think of the Trump organization as a real estate company. But as we've seen in Trump's second term, crypto has played a much bigger role in the Trump family fortune, and in some ways, real estate and crypto have melded. So this Maldives example is is a great example of that. They are saying that they're going to tokenize this project, sort of an untraditional way of financing a project that will bear the Trump name.
You mentioned the Maldives example. Are there any other crypto projects that have been announced recently that should be on our radar between the Trump organization or members of the Trump family and anyone else in the universe?
They've had many different crypto projects that have added to the Trump's $7 billion net worth. One well-known example is World Liberty Financial. Again, there's been discussion of some kind of tokenizing real estate assets, and that sort of exposes, real estate is very different from crypto in that when you build a real estate project or even just license your name, as the Trump family does to many of these real estate projects, this can be a years-long process to build a huge development, where crypto really relies a lot on instant gratification. Very swift riches can be made, as we've seen. And so something like tokenizing the Trump Tower Dubai was floated, and that in relation to World Liberty Financial. So that's another example of how you might appeal in some ways to retail traders or trigger-happy crypto investors with that Trump name and brand.
As far as we know, is Saudi Arabia's Crown Prince and President Trump, are they going to announce any kind of crypto kind of deal or initiative at today's meeting, or is this really focused just about like big military deals, big tech deals?
So to unpack a little bit where Saudi Arabia is fitting into this crypto picture, one of the key real estate partners that the Trump organization has kind of cottoned onto in Trump's second term is the Trump organization works closely in various projects with Dar al-Arkan, an arm of this Saudi real estate developer. So that is, and this Maldives resort is an example of these Dar partnerships. So that's kind of where we're seeing the overlap.
And Annie Massa of Bloomberg News, she and her team have done some incredible reporting on the Trump organization and the Trump family net worth and how it's changed in recent months and during this second term. Check it all out at Bloomberg.com and on the terminal. Hey, coming up, OpenSea CEO joins us in just a few minutes to talk about his platform's expansion into crypto products outside of NFTs. Also, last week, we caught up with Circle CEO Jaime following the company's earnings. He feels confident in the company's growth.
We've built the most transparency, the most liquidity. And by the way, we've also brought that liquidity at scale to major banking systems around the world, where we mint and redeem hundreds of billions of dollars of USDC. So it has the best primary liquidity in the real banking system compared to any other product in the market.
NFTs, non-fungible tokens, remember those? They've lost the spotlight in recent years as Wall Street's focus has pivoted from crypto to AI. The total NFT market has fallen about 80% since 2022, from more than $17 billion to about $3 billion now. Many NFTs were sold on OpenSea's website, which is branching out from those tokens to other crypto assets. Let's bring in Devin Finzer, the CEO of OpenSea. He joins us here at Bloomberg headquarters. Welcome. I'm just curious about the OpenSea's business right now. Given the decline of NFTs and the interest around NFTs, what would you consider OpenSea's core business?
Yeah, so I think, we really see it as this broad trend of the tokenization of everything. And if you look at kind of the tip of that iceberg, you're seeing a ton of talk, and I know you guys have covered in the show previously, about financialization, stable coins, all of the sort of finance side of crypto. What we're really excited about is building a platform where people can trade everything that represents the broader landscape of crypto goods, which includes NFTs, but it also includes tokens, right? And so OpenSea is really focused on this idea of let's bring crypto to a broader consumer base, and let's really bring a platform to those people that allows them to trade anything super seamlessly. So that's what we consider our core business now.
But NFTs are still a part of your business,
Exactly.
right? They haven't gone away.
Yes.
So having said that, what why is it that NFTs have not recovered in the same way that, say, Bitcoin has, right? After 2022, we've seen Bitcoin recover tremendously.
Yeah.
I mean, it's been very volatile, but it's gone up and to the right. NFTs haven't done that. Why haven't they been rising with this?
Yeah.
I'm going to give a rising boat lifts all tides kind of a analogy.
But aquatic.
Exactly.
Yeah. So I think if you zoom out, right, NFTs are the non-fungible component of the crypto asset class. But it's really about this broad trend of just tokenization, right? And some of those things are going to look non-fungible, some of them are going to look fungible. But there's all sorts of use cases that people are exploring. And I think the sort of speculative fungible side of things has been taken by some of the more the currencies that allow people to trade in that manner, right? And so we see it less like, let's subdivide into NFTs versus other assets. We just see all of the innovation that's happening under the surface, and then we want to provide the best place to trade all of that.
So Vlad Tenev of Robinhood has spoken a lot to us about, and a lot to everybody about tokenization. This has been the horse that he has been on for quite a while right now. Would you say that your idea is to compete with a company like Robinhood when you are able and when one is able to trade tokenized stuff online?
Not directly competitive in the sense that I think Robinhood, Coinbase, these are companies that are building financial platforms and sort of banks for crypto. OpenSea really was the first company to bring crypto to a broader consumer audience, right? In 2021, we had musicians, we had gamers, we had artists, we had collectors come to our platform and often use blockchain or crypto without knowing that there was Bitcoin or Ethereum involved. So that's really our vision, is we want to bring this not just to people who want sort of a new bank, but to people who want to experience all of what crypto has to offer. And we're just at the beginning of that. We think that there's so much to build and so much room to grow.
I'm curious to get your take on the wobbliness that we're seeing in crypto assets overall. We've had Bitcoin lose its gain for the year. It's stabilizing right around 90,000 right now. But what does this mean for the guys who are building the architecture, the infrastructure for crypto versus those who perhaps just got into crypto maybe in the past year?
Yeah, so I think for the people who are on the ground floor building in crypto, they're more used to the ups and downs of the industry. And for us as a company, for example, we really look at the long-term arc of the technology and the systems that are underlying all of this. So there's been a ton of innovation in L2s, in stablecoins, in on-chain payment rails, in self-custody solutions that really, if you look at that arc, it's a gradual increase in the capability of the technology. And then for the mainstream, what they see is the ups and downs, right? But for us, we see the long-term arc.
Devin Finzer, good to see you. Thanks for swinging by the studio. Appreciate it. That's OpenSea CEO Devin Finzer. That is going to do it for Bloomberg Crypto. We'll be back again next week, same time, same place. This is Bloomberg.